Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's a start which is in the red for this week for the Nifty, Sensex, as well as for the mid-cap index at this point in time. But we are doing what a lot of the globe is already doing. So, for example, we're down around 2% for the Nikkei or thereabout. Hang Seng is down around 1.4%, or rather the Nikkei is down around 1%. So we are seeing that kind of trepidation or weakness coming in on the Asian screen, and that seems to be percolating onto what we are seeing on our screen as well. But nonetheless, what seems to be leading the decline is definitely what's happening with the banks. The bank Nifty is down 0.7%. There was an intraday recovery got sold into, as well as what's happening with the metal stocks. For example, Hindalco is one of your top losers on the Nifty at this point in time. Lot of stocks in focus to discuss. There are the likes of Aurobindo, which is down 3.5%, Hindalco, which is down at the low point of the day, and the likes of Tata Motors as well, which is sluggish and sulking at this point. Hi, Prashant.
Ekta, hi. And this seems like a global thing, because you look at Asian markets which are trading and there is 1 to 1.5% cuts on most big Asian indices. And I mean, if you had to pinpoint the reason, it is essentially, you can blame it on Mr. Trump and his comments about wanting a trade war, and on top of it, well, they apparently being easy to win. That was, of course, a tweet which attracted a fair bit of attention and criticism from trade economists, etc. as well. But one thing is pretty clear: this is a global thing, and this is essentially nervousness about where this may actually lead to. Remember, we have a situation where global growth actually is pretty strong. Many believe that global growth will be strong throughout this year, may hit a high and then peter off. Well, that might have been fine, but now you've got this additional fear of a trade war starting. This was there before Mr. Trump actually took oath in late 2016, but it kind of went away. He was busy with other things, and now it's kind of sort of back on the agenda with very firm, definitive kind of things. And we're talking about steel and aluminum for starters. Now there is talk that maybe cars could be taxed from the European Union into the US. One doesn't know where this will stop, and one doesn't know how other countries will retaliate. And one thing markets don't like is even a whiff of trade wars, and what essentially this would lead to is anti-globalization. So I think we need to sort of keep our, there'll be a lot of commentary, but one thing is for sure, this has again brought back volatility. There was starting to be some sense of semblance in global markets as we closed off last week, but this is sort of unraveled things a little bit at this point in time. Sudarshan Sukhani of S2 Analytics is with us on the top as always. Sudarshan, good morning. Good to have you here. The market's down 104, 105 points. I mean, how do you trade something like this? This essentially will depend on what? More tweets, more actions, retaliation from other countries. Very difficult to quantify. I mean, take steel, for example. Most agree that what the US is suggesting will have very little impact on steel makers, but it doesn't matter, does it?
Yeah, good morning again. See, we cannot quantify how this trade war is going to result on individual stocks or the markets, but the markets quantify it, and the markets are falling. So that's all we have to see. We just need to look at the market action, and the price action tells that we are going to lower levels. Last week also I explained that the trade here is simply to expect the Nifty to reach lower, maybe somewhere around 10,000, and therefore to position myself, or the trader should position himself for a lower Nifty level. That's the trade. Buy 10,400 puts if you still haven't bought them, and wait patiently for the next few days or maybe a few weeks till March expiry for the Nifty to come lower.
Okay. So Darshan, morning, if you had to choose between Hindalco and Aurobindo technically, in terms of what is looking incrementally weaker, which one would it be?
Oh, it will be Hindalco. Actually, Aurobindo is not looking weaker. It just happens to react to today's news. But Hindalco, as part of the metals pack and independently, is looking as if it is topping out. That's much weaker.
What would your picks be, Sudarshan?
Well, the picks are generally to sell. First we start with India Cement. India Cement is part of the cement pack with all the good news. See, Prashant, the cement stocks are going down. Something is going on which we don't understand, but the prices tell us we should be looking to short them. That's a short sell. Kajaria Ceramics has been a short for some time now. In this bull market, it was falling consistently day after day. Again, that's a short. And just to balance it out and to explain that I'm basically essentially upbeat on pharma. It's bottoming out. Biocon is a buy for me.
Okay, all right. So those are your picks. But Sudarshan, we have a couple of queries, so we'll get them answered. First is Yash Jethani, 411 shares of NBCC, which is bought at 242, wants to know whether to hold or to average out at current levels.
Well, I think there should be no averaging. This is a stock that's falling. That's why it's lower price now. That's why we are thinking of averaging, but do not average. There is no end to this decline. This could be a deeper correction. There may be much more downside before some kind of base building and rally starts. So do not average now. We do not know if this is the end, but hold on. It's a good blue chip. Eventually you will get your price and something higher, but averaging would simply mean we may increase our losses for the short term, and that's not worth it. Hold, but do not average.
Okay, hold but do not average on NBCC. So that's the recommendation coming in from Sudarshan. And Sudarshan, we're going to let you go on that note. Thanks very much for joining in this morning and giving us all of your strategies and stock ideas. And do remember, viewers, you can tweet your questions to @CNBC TV18 News, @CNBC TV18 Live with the hashtag #CNBC TV18, and our technical experts will be advising you directly on your investments.
Okay, let's get in some F&O strategies from Rahul Shah. He's with Motilal Oswal. Rahul, good morning. Good to have you here. What would you trade?
I think, again, we've seen the sell-off continuing in the rally, and then financials and metals, we've seen a lot of selling all around. So I think only sector which has outperformed is IT, and that too also mid-cap IT. So I think we should continue shorting the sector which is weak. So I feel housing finance space, Indian housing, we've seen the longs unwinding and a fresh short built up. And technically also it has broken the crucial levels. So I think I would go short in Indian housing with a stop loss of 1260 and target of 1165. Second is we've seen the sell-off all around in all the metal stocks. And especially in Hindalco among them looks more weak. I think we've seen entire Hindalco being the laggard in entire metal space. So I think again, Hindalco below 232 looks very weak. So I think we'll go short on Hindalco with a stop loss of 237 and target of 222. And as I rightly said that, that IT stocks, mid-cap IT stocks have been outperforming for quite some time. So I think KPIT is closer to its newer high. So I would buy KPIT system with stop loss of 212 and target of 233.
Okay, all right, Rahul, we're going to let you go on that note. Thanks very much for joining in and taking us through those strategies. Need to take a break now, but up next we'll be discussing what's happening in the commodity space.
Okay, 100 points lower on the Nifty. We're at 10,354. The mid-cap index is down about 180 points as well. That's down about 0.9%. There's news at the bottom of the screen. Karti Chidambaram has moved the Supreme Court seeking quashing of summons issued by the Enforcement Directorate. And I think that is the only one which is coming. At this point, we don't, I think, have a word in about when the Supreme Court is going to hear the matter, but they moved the SC in this particular matter. Some stocks are bouncing off the lows. I mean, nothing very large, but, a little bit, 0.5%, 0.75%. So some steels, JSPL, look at something like a JSW Steel. There is some recovery, marginal as it might be, from the day's lowest level. Let's keep it with steel and aluminum essentially. We had, of course, President Donald Trump, who said that the US is likely to impose a 25% tariff on steel and 10% for aluminum imports into the country. This, of course, has raised fears of a damaging trade war. We have to discuss this. Mark To, who joins in, he's head of research with the Wing Fung Financial Group on the phone line. Mark, thanks very much. Good morning. Good to have you here.
Having me.
So, first of all, we don't know the specifics, right? I mean, we get to know those later in this week. But how concerning is this when for global trade?
Well, I think, as you said, we don't know the specifics yet. And and that's why we are going to prepare for the worst and to expect the unexpected. But after the details are announced, I think the market can really price it in rather quickly. And for the present situation, I tend to think that the trade war, if there is anyone, I think it could be disastrous to the whole world. But it is not to be ruled out, because you can see that the Trump administration have been doing a lot of things that people didn't expect him to do at all. And this, at this moment, I think we have to calculate as investors or as market participants to a certain extent that these unexpected events or the tail risk are going to be realized, and that could be very important especially for the commodities directly affected. For example, the aluminum or the steel prices, as well as the other precious metals. I think to a very large extent, the trade war is a lose-lose game for everybody, just like any negative-sum game. But on the whole, some players are going to retaliate at any stage, will create such a kind of effect that the other people are going to do the same. And I think that's the essence of non-cooperative game.
Sure. Mark,
nobody is going to gain.
Okay, Mark, that point is taken. But do you think that there could be some amount of retaliation coming in from the European Union?
Well, it's hard to say, because every country is going to calculate or to assess the impact. But it is really hard to say, because we lack the specifics, whether the details are going to be announced soon. We have to wait. But overall speaking, I tend to think that from the international trade point of view, it is better not to retaliate, even though the United States are going to have very large impact on the terms of trade or on the actual balance with the other countries. But I tend to think that in the long run, if more than one country is going to retaliate, the trade war will be significantly affecting the benefit of the whole world.
Okay, Mark. Hi, Manisha here as well. You know, what is your sense on the prices then? Because this year we've seen the US steel prices gain up by 20, an expectation that we might see these protectionist measures coming in. Today, of course, is a different day. We have seen the iron ore prices decline. The steel prices are in the negative as well. So until we actually hear that a final decision being taken, how do you see the metal prices trading?
The metal prices, I think, they're going to be significantly affected, especially steel, aluminum, all kinds of trade that is affected by the U.S. sanctions or the tariffs. And I think that at this moment we have nothing significant to do except to accept the situation.
Sure.
The terms that is going to be set by the United States.
Sure. Mark, also, the other thing really is about the excess or steel glut that we are seeing in European Union. China is looking to cut steel excess capacity by 30 million tons in this year. So there are various countries doing their bit when it comes to excess capacity, as I said, in European Union and China as well. Would that have any impact on the steel prices?
Of course, for mainland Chinese, we know that the overcapacity have been accumulated for the past decade, especially because we have some kind of plans to counteract with the potential impact of the financial tsunami early in 2008. And because of that, we have overcapacity, and because of the investment in the infrastructure or in the fixed assets, I think that is going to be changed in the present regime, in the present administration in China. It has to do somehow with the Trump's actions, but I tend to think that overall speaking, we are going to do it whether there is any tariffs set by the United States.
Okay, Mark, thanks very much for that. Appreciate you joining us with that quick perspective on steel, the world of metals, and of course what may happen in the future. Okay, Manisha, why don't we continue? What else is happening? Anything else getting talked about, or is just this?
Well, it usually is, it majorly is metals today, Prashant, because we have seen a very sharp decline come in for those metal prices, not just steel and iron ore, but if you look at the aluminum prices, zinc, copper, all of that is trading in the negative. Remember, Friday wasn't such a great day as well. And while we did try to pull up or pick up from those kind of levels, we haven't been able to make much of a headway right now. But Gnansekar as well joins us to give his strategies on that space. Gnansekar, hi. What is it that you're picking up from what the Trump administration could finalize in this week, and how are you putting strategies for the metals as a space?
Well, it's very concerning, and I think most bullish bets are off at this point in time. And, I think the markets are going to bide some time and find out what are the actual numbers and how it's going to really affect the market. But what's more worrying is the possible retaliatory tariffs from other countries. That could really have a macroeconomic impact and certainly have a big impact on demand going forward. So that is a big concern. But if in the next couple of weeks or going forward, nothing much comes out and it still remains a rhetoric, then I think the market will drop it and move on back to focus on the dollar, its strength and weakness. But right now, I think many positions would be cut, and I think a lot of potential selling could happen in metals, and it's better to be cautious.
Sure point. Even as the crude oil prices do not have any direct relation to the tariffs that we are discussing in US today, but with the kind of analytical reports that have been coming in on how much money is being spent on energy infrastructure and how these tariffs actually could hinder a bit of that growth on those projects as well. Do you see that in any sense impacting the crude oil prices?
It could temporarily, Manisha, but then, the dynamics in crude oil markets are very different, and the way things are changing there. For example, the, OPEC talking to all the shale producers to come to some kind of an understanding. These are things which are very big positive developments for crude. So, the other things like this could impact it in a very minor way. But then there's some major developments happening there in crude. One needs to keep an eye on that.
So any strategy that you would have in crude oil prices for today?
Yeah, crude is absolutely a buy and dips now. Till last week, it was kind of dicey and the dollar strength playing a role. But right now, we're buying it on any dips for a target of 4,100 to 4,150 on the domestic markets.
Okay, all right, Manisha as well as Gnansekar, thanks very much for joining in, taking us through those strategies. For the markets, it's a weak advance decline ratio, but what is managing to hold its head above the water is the entire IT space. The Nifty IT stocks, all of them should come up for you, the likes of Techem and Infosys.